The extent of P&L or extension of P&L, we call it as P&L appropriation account. Always remember, in case of outstanding, you should add. In case of prepaid, you should minus. 45,000, you already calculated 5% that you are supposed to minus. And one thing remember, whatever gives an adjustment, always double effect. 2 times it will come. A warm welcome to one and all. This is your ALsir here, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. Now we are discussing your topic 1, unit 1. It is called as Final Accounts of Partnership Firm. So we'll not go in detail. Whatever required for your examination with concept we will learn. Now in this Final Accounts of Partnership Firm, already we have learned what is a final accounts. Usually we go with sole proprietor or individual, we prepare final accounts. Similarly, we do final accounts of partnership firm also. What is the extra thing we will get in partnership final accounts? We will learn in today's session. These are the trial balance given in the question. In the trial balance and additional information, just like your sole proprietor, whatever the trial balance and additional information they give, few documents or few accounts we are supposed to prepare. Which are those few accounts? Remember, first we'll go with your trading account. There is a first one. First we have to prepare trading account. Next we'll go with profit and loss account. There is a second part, profit and loss. What is the third one? The third one we call it as profit and loss appropriation account. Always remember, while doing partnership, the extension of P&L is called as P&L appropriation. Again I'll repeat, the extent of P&L or extension of P&L, we call it as P&L appropriation account. Now P&L appropriation account we prepare for partnership because once you get your profit, the profit will be shared to whom? Yes, the profit will be shared to all the partners. While sharing to the partners, if there is any salary pending to partners, any interest on capital has to be given, interest on drawing has to be collected, any other benefits given to partners, each and everything will be considered in the P&L appropriation. Once you're done with P&L appropriation, we should know that what is the individual partner's balance. For that we prepare partner's capital account. Partner's capital. Once you are done with partner's capital, the last account we call it as balance sheet. Hope you are clear. How many accounts we prepared in the partner's final accounts? Trading account, P&L appropriation account, partner's capital account, and the last one, balance sheet. It looks big, but it is the easiest topic. You will get very less adjustment. Whatever you studied in the first PU or second PU, 11th or 12th, the same concept will apply here, but only the extra thing is P&L appropriation, partner's capital. This also you have done in the partnership account. While you are doing your second PUC at 12, you have done your partnership, admission, retirement, death. In that we have done your P&L appropriation as well as partner's capital. But compared to that, this is easy. Now, we'll go with the trial balance. We'll go one by one, which goes where. Now, you have capital, Lakshman capital, drawings, Lakshman drawing, sundry debtors, all your balance sheet item, debtors and all balance sheet item. Plant and machinery, fixture and fittings, stock, cash in hand. Almost everything is balance sheet item except stock. And drawing and capital, all this goes to partner's capital account. Similarly, you have cash at bank, purchases, you remember, it goes where? Trading account, purchases and sales. Then we'll go with wages, salary, bills payable, bills receivable. These are your balance sheet items. Next, insurance. It is under P&L. Return from customer. It is nothing but sales return. Wherever you write sales, from sales you are supposed to minus sales return. Carriage inward. It is your trading account, direct expenses. In the trading debit side, it will come. If you do 2-3 problems, you will be familiar with which comes under which account. Now, return to creditors, purchase return. You have to minus from what? Purchases. Very good. Commission and traveling expenses. All the expenses always debit side. Rent, rates and taxes. Again, expenditure which side? Debit side. Trade expenses, debit side. Discount, it is amount is in the debit side, so it is expenses, discount allowed, so it should be debit side. Bad debts, debit side. Creditors, balance sheet. Loan, balance sheet. Sales, trading account, credit side. These are the simple thing you are supposed to remember. Now, adjustment. Allow interest on partner's capital 5%. Wherever you take the partner's capital account, you have to mention what is the percentage on interest on capital. It will be 5%. Interest on drawing, it is no need to calculate. They have given directly 275 and 190. They have calculated and given. Next, depreciate plant and machinery by 10%, fixture by 5%. Your plant and machinery have to depreciate 10% and fixture by 5%. Provide for bad debts. Plant and machinery 10% depreciation, take it in the P&L account and balance sheet minus. Fixture 5%, P&L debit side depreciation, along with that balance sheet in the fixture you are supposed to minus. Provide for bad and doubtful debts 5% on sundry debtors. So on debtors you have to calculate 5%. I'll show you the calculation while doing. Outstanding liability wherein respect of wages 300, salary 175, rent is 200. Always remember, in case of outstanding you should add. In case of prepaid you should minus. There is a logic you have to remember. Always the outstanding should be what? Add. Always the prepaid should be what? Deduct or minus. Now, outstanding liability like wages is 300. Wherever you write wages, no, for that wages you add 300. Wherever you write salary, salary usually comes under what? Profit and loss account. In the profit and loss account, for salary, you are supposed to add 175. Next, insurance was prepaid. Prepaid, as I told you, what you are supposed to do? You have to minus. So, in the insurance, wherever you write insurance, profit and loss account, debit side. In that, you are supposed to minus 75. Then, stock was valued at the end of 50,000. Always remember, this stock given in the adjustment, we consider as closing stock. Closing stock always comes under adjustment. So, closing stock comes under trading account credit side and balance sheet asset. These are the basic thing. If you work out 2 to 3 problems, you will be familiar with which comes under which head. Now, we'll go with the solution. Again, I'll show you the question so that you will be little familiar with the numbers as well as the headings. I'll go with the question again. We have all the 2 capitals. The balance sheet item, drawing, it is also your balance sheet item. Remember, these are balance sheet item. Debtors also balance sheet. Plant and machinery, it is a balance sheet. Furniture and fixture, it is a balance sheet. Opening stock, trading account. Cash in hand, balance sheet. So, remember, one more shortcut is, in the balance sheet, the amount is in debit side, then it is asset. In the balance sheet, the amount is in credit side, then it will be called as liability. See, Ram capital, Lakshman capital, where is the amount? Credit side. We know that it is in balance sheet, but in balance sheet where it comes? liability. The amount showing on credit side means it is balance sheet liability. The amount is showing in debit side means in case of balance sheet item, it will come under where? Asset side. Now, so these are the things you know. Cash at bank, it is a balance sheet. Purchases trading account, wages trading account, salary P&L. Rest I have written everything. Hope you are clear. Return from customer, sales minus, carriage inward, trading, returns on creditors, purchase minus, commission, it is P&L. Then rent and rates, P&L. Almost I have given all the headings, it comes under where. Same kind of problem you will get for other in your examination also. Now we go with the answer C. Opening stock we considered, purchase minus return, your net purchase, wages plus outstanding. I'll show you the working note. Outstanding liability were in respect of wages. How much? 300 they have added. 16,000 plus 300, you will get 16,300. Next, gross profit will come later. Carriage inward is 400. This side, your sales minus return 1 lakh to 300. Next, your closing stock, it is also given in adjustment 50,000. We have taken 50,000. You have to see which side is more. Like 1 lakh 2 plus 50, 1 lakh 52. If you add everything, it will be lesser than 1 lakh 52. Right? 1 lakh 52, 1 lakh 52. From this, if you minus all this, the answer is called as your gross profit. Hope you are clear. The answer is called as your gross profit carry down. Hope you are clear. Yes, whatever gross profit carried down, that will be brought down for next P&L, next account. Your gross profit brought down is 56. Now it is simple P&L. All the incomes comes under credit, all the expenditure comes under debit side. In this question, they have given all the expenses only. Now, salary plus outstanding. Here, insurance minus prepaid. Here, I'll show you where you have all these adjustments. See, outstanding salary 175, prepaid insurance is 75. These things only we consider. After that, commission and traveling expenses 5,500. Your rent rates plus outstanding 5,700. Then your trade expenses 600. Discount 200. Then bad debts 250. New provisions. What is this new provisions? I'll show you. In the adjustment they have given provision for bad debts is 500. They have given on sundry debtors. What is the value of debtors? Go back to your question. Again go back. Where is debtors? Yes. Debtors is called as 45,000. On 45,000, what is the percentage? 5%. You calculate 5%, you will get 2,250. This is a provision. I'll go to your answer. See, 2,250. How did you calculate? On 45,000, you calculated 5%. You will get 2,250. I'll show you here. 45,000 into 5%. You will get this answer. Depreciation on plant and machinery we have taken. Depreciation on fixture we have taken. How did they calculate? Go to plant and machinery, take the value, percentage. Go to fixture, take the value, percentage. You will get. Where do you get percentage? I'll show you. The percentage on plant and machinery, take 10%. See the value of plant and machinery on the 10%. See the value of fixture on that 5%. Now, after that, you have to add everything. Here it is 56,600. 56,600. From this, if you minus everything, your net profit is called as 32,250. Hope you are clear. Yes. Usually, in the final accounts of sole proprietor individual, we are almost done with this. We'll go with the balance sheet. But we are doing what? Final accounts of partnership firm. Under final accounts of partnership form, along with your trading and P&L, the next step will be what? Extension of P&L. What is the extension of P&L? Yes, P&L appropriation account. Again, I'll repeat. What is the extension of P&L? P&L appropriation account. Now, P&L appropriation account, this will go to P&L appropriation. I'll show you P&L appropriation. Now, 32,250, this we carried from P&L. Then, if there is any interest on drawings are there, 275, 190. Debit side, any interest on capital we consider. Anything left to partners, like if you're paying salary to partners, you're giving commission to partners, anything is given to partner, that should be considered here. Now, once if it is done, next what we will do, the total is 32,715. 32,715. This side also 32,715. From this, if you minus this, your answer is 29,465. 29,465. Now, so what is the answer? Your answer is 29,465. So how to share to Ram and Lakshman? I'll go back to your question. So they have given 3/5 and 2/5. What is the ratio? 3 divided by 5, 2/5 means 3:2. So this 29,465 into 3/5, 29,465 into 2/5. We are done with your P&L appropriation. What is the next one? We have completed trading account. We have completed P&L. We have completed your P&L appropriation. The fourth one is called as partners capital. So whatever balance is left, that will go to where? Partners capital. In the partners capital, we'll start with your profit and loss appropriation answer. 17,675, 11,786. What is your capital? I'll go back to your question. Your capital is, see, 35,000, 30,000. Yes, your capital is how much? 35,000 as well as 30,000. Once you are done with this, what is the interest on capital? Again, we'll repeat, 17501500. Hope you are clear. Yes, once you are done with that, what is the interest on drawing? What is the drawing amount? The balance will be called as your balance carried on. Don't calculate how did you get this 45. From the total, if you minus these two, you will get your balance. Now, once you are done with partners capital, the easiest part is called as balance sheet. In the balance sheet, first we go with the capital. Ram capital, Lakshman capital. Where do you have Ram and Lakshman? See answer, 45, 34. This answer. Bills payable given in the question, loans, question creditors, all the adjustments, outstanding wages, salary, rent. You are done with your liability, easiest one. Now come to asset. In the asset side, we have plant and machinery minus depreciation. Furniture and fixture minus depreciation. They have already given percentage like 15,000 into 10%. 1,500. Fixture 11,000 into 5%. It is 550. Where the percentages are given, which are given in adjustment. Now, once you're done with plant and machinery as well as your furniture and fixture, the next one is debtors. 45,000, you already calculated 5% that you are supposed to minus. And one thing remember, whatever gives in adjustment, always double effect. 2 times it will come. Next, cash in hand given in the question. Cash at bank 10,000. Bills receivable, prepaid insurance, your closing stock. Your total should match with asset as well as liability. Hope you are clear. Yes, this is what your partner's final accounts. As I told you, repeatedly do this problem because the answer is very lengthy, but it is not difficult. It is the easiest one. You will not get any extra or tough adjustments. Always you will get easy adjustment and all the basic things only. This problem is more than sufficient for your examination preparation. In the notes, I have given other 2-3 problem with solution. Please work out that also. This problem, always keep it as a concept. If you know the concept, you can clear any number of problems. I'll go out of the screen. Please take screenshot if you want of any question or solution. This is your question. Continuation. Your adjustments, your solution part, trading and profit and loss account. So in this, we have all the expenses. Your commission and traveling expenses, I'll show you. What is the commission and traveling expenses? 850. Your commission and traveling expenses are 850. While totaling, you have to consider your P&L appropriation account, partners capital, balance sheet. Yes. So this is what your final accounts of partnership firm. So hope you understood the concept of what is final accounts of partnership firm. In the next class, we'll meet with the next topic. Thank you.